Good morning, good afternoon, and good evening. I'm Chantal Carrington, CEO of Invest Africa, and I'm delighted to welcome you to Invest Africa's annual Southern African Regional Outlook webinar. It's the first one of the series this year. The Southern African region faces a mix of challenges and opportunities, with a steady growth projected at 2.6% amid political shifts, structural reforms, and evolving global dynamics. As a South African, I'm optimistic following the formation of the GNU in 2024, seeing transformative reforms that are revitalising investor confidence and economic stability. The fact that there's been no load shedding for a prolonged period marks another significant milestone, and the G20 presidency, a first for the continent, will provide a unique platform to advocate for Africa on the global stage. The rising demand for critical minerals presents significant opportunities for Zambia, Zimbabwe, and others to drive the green energy transition and broader industrial growth. Efforts to deepen collaboration in trade, energy, and infrastructure within the Southern African development community should feature prominently throughout this year, fostering resilience and creating avenues for sustainable growth. Now, as you can see, there's a lot to discuss today, and I'm going to hand you over to our moderator, Nomsa Mbere, who is the partner at Webber Wentzel. But first, let me tell you about her expertise in mining, logistics, ESG, and energy, and she also sits on various committees focused on Southern Africa. Now, I kept this very short, but you should really take the time to look at all those details about these various committees that Nomsa is sitting on, because it really is impressive. So Nomsa, no more pressure. I'll hand over to you to take over the debate. Thank you.
Thank you very much, Chantal, for that introduction. Very generous indeed. So good morning, afternoon, or evening, wherever you are. As Chantal has said, we're potentially witnessing transformative moments in our region that could set the stage for long-term prosperity if we play our part. Today, we're joined by a panel of experts who will guide us through this discussion. We will explore strategic pathways for investment, the role of critical minerals, as Chantal has said, and the recent shift in power in the region from 2024 elections. And lastly, we will look at the South African presidency of the G20. I take this opportunity to introduce our panelists. Firstly, Rufaro Nyakatawa, and I would like at this stage for her to say a bit more about herself. Hi.
Thank you very much, Nomsa. My name is Rufaro. I have been in the financial services industry in South Africa for quite a long time. I think it's more than 25 years now. And I had a stint in West Africa where I was working in EcoBank. I was seconded in that region. And that was the time when I was also doing my PhD on really doing business in Africa. And I wrote a book in that regard, which was really based on my insights on my time that I spent on the continent. At the moment, I do work for Jersey Finance, where I work with the financial services industry together with the government of Jersey to promote Jersey in Africa so that Jersey can really make a meaningful role, especially in the development of the continent. And I think on that note, I can say this is me.
Thank you very much for that introduction, Rufaro. And next, I would like to invite Chris to say a little bit about himself. Thanks. Over to you, Chris.
Yeah, hi Nomsa, hi Rufaro. Just quickly on myself, yeah, my name's Chris. I lead the political risk analysis team for Marsh's Credit Specialties division. So in this team, we're focused on helping clients think about and understand and assess various geopolitical risk issues, mainly focused in Africa, but also in other emerging market regions around the world where they may operate. And I think I'll just leave it at that for now.
Thank you very much, Chris. I invite you all to engage actively, share your insights, and pose your questions as we unpack the trends, opportunities, and strategies that will define Southern Africa's trajectory in the year ahead. We will try to leave some time for questions at the end, and to the extent that we run out of time on some of the questions, we'll try and respond to them online. Please post your questions online so that we can see them very clearly and then respond to them. Now, opening the conversation with Chris, and to set the stage, Chris, what does the macroeconomic picture look like for the Southern African region in 2025?
Yeah, thanks for that. So I think this is a good question to start with because in the context of political developments, investment opportunities, and so forth, having a sense of what the macro outlook is, but also what some of the risks are to the forecast, I think is valuable. So as Chantal mentioned in her opener, the growth predicted generally for Southern Africa is 2.6% GDP this year. And there's some variation, obviously, between the different markets in that growth figure. But what I think is always potentially more useful or most useful here is not to sort of outline some information and some data points that you can potentially read, or you those attending the webinar can potentially read in any outlook. But to think about what are some of the assumptions that are being made in these macroeconomic outlooks, and why might they prove to be incorrect. So I'm just going to start with a couple here, and I'll try and be relatively brief. I think the first one is an assumption generally for any outlook you read anywhere in the world that was published towards the end of last year, is a general easing of monetary and financial conditions this year. Obviously, the impact of that would support economies. It would support currencies, as if the U.S. Federal Reserve is cutting rates, that will allow economies in Africa to also cut rates, and also would probably lead to a weaker U.S. dollar relative to the strong performance that it's had over the last couple of years. Some of you may have heard that already these expectations are potentially being undermined. Right now, following a quite strong jobs report from the United States just a couple of days ago, markets are now pricing in one single interest rate cut of 25 basis points from the U.S. Federal Reserve this year. That means that there actually is likely to be more pressure on Southern African currencies, more pressure on emerging market currencies than was initially forecast in some of the outlooks you may have read. The other thing is that one of the tail risks that was given in a number of outlooks, not to pick on any in particular, for what could lead to fewer rate cuts would be if the new incoming U.S. administration implemented tariffs that were inflationary in the United States and caused the Fed to have to maintain rates or even hike rates again. But this reaction of just forecasting a single rate cut in the United States is not a result of tariff policy. It's a result of a strong jobs performance. So there is the possibility that with tariff policy implemented potentially on top of this, that there could be a sort of a even more significant impact. One of the other factors that has generally been assumed in some of the outlooks I've been reading anyways is Africa's energy importers, including many Southern African countries, will benefit from relatively low oil prices this year. Now, obviously, that's bad for energy exporters on the continent, but generally a majority of Southern African countries are reliant on oil in particular imports to meet their energy needs. That assumption may be proved to be correct. I generally think it will. However, so far in the first 2 weeks of 2025, price of oil is up 8%. So that's a pretty significant increase, and one to keep an eye on. And I was having a conversation not too long ago with a Bloomberg oil reporter who was explaining to me that last year everyone sort of felt that oil prices were going to be sort of around the $85+ a barrel mark, and they turned out not to be. And now everyone is all standing on one side of the boat, and all sort of betting that they're going to be relatively weak prices, that they're going to be relatively soft. And the point that he made to me was that when everyone is standing on one side of the boat, standing on the oil prices will be weak side of the boat, it doesn't take a lot to try to all of a sudden get everyone rushing to the other side of the boat, start to unwind bets against oil, and the price of oil would increase accordingly. So I think those two things that are being assumed when you're looking at macro outlooks for the Southern Africa region of generally easing of monetary policy conditions, generally low oil prices for 2025, take those with a little bit of grain of salt and pay attention to them, because for the markets in Africa, in Southern Africa, that import energy, and for most of the markets that are, have had currencies under pressure, South Africa, generally speaking, a notable exception. Those are two factors to keep in mind. I will also, from a macro perspective, end on a couple positive notes. One is that there were no new, across Africa, no new defaults in 2024. And indeed, there were quite a few positive developments in terms of some of the debt restructuring efforts that are going on, and making progress in reaching agreements. And I think everyone needs to keep in mind that the debt environment in Africa is different than what the debt environment in Africa was 5, 10, 15 years ago, where it was mainly bilateral creditors and large multilateral institutions like the IMF and the World Bank. Now, and for the last 5+ years, it's been bilateral creditors, countries, big multilateral institutions, commercial banks, other private debt holders. And this added complexity has taken time for all of the creditors and the countries to figure out, how do we all work together? How do we design a mechanism to reach agreements on restructuring so that we can support these companies' continued growth? And this is something that, through the progress that's been reached in countries, countries like Ghana, countries like Zimbabwe, over the course of the past year, should be considered, in my view, evidence that there is significant progress in figuring out how do we navigate these more complex debt holdings that countries now have. So the sort of multi-year drawn-out defaults where there's just no resolution because no one can agree on anything, I think those are going to become less frequent, and there's going to be better consensus and ability to move forward on these sorts of agreements. The final point I will make is Africa has sort of experienced 3 waves of foreign direct investment. The first one was, generally Western countries, the United States in the early 2000s, late 90s. Then, of course, came China. And right now, over the past couple of years, potentially the largest wave of investment that's been begun coming out of the Gulf countries, and particularly the GCC, with investments in infrastructure, investments in critical minerals, and investments in renewable energy. These are all trends that, in my view, from a macroeconomics perspective, we ought to expect to be continued. And so I think the question is, in the context of the challenges in Southern Africa and the rest of the continent, how do we recognize and take, and how do organizations work with and support countries in harnessing this investment? But I'll stop there on the macroeconomic question.
Thanks, Chris. And just moving on from that, I would like to sort of ask, apart from the financial aspects that you've mentioned, what would you say are the two drivers that, are focused to be drivers of this projected sort of increase in growth in the Southern African region.
Yeah, I mean, just very quickly, I think it's a bit of what I spoke about. One certainly the investment, but the other one is, I think we'll also come to this when we talk about South Africa's presidency of the G20, but that's the investment in climate change and climate friendly ways of producing energy, but also climate resilience and investment that's going to be made more available around that.
Thanks. And then, we've had a lot of elections in the 2024 in the region. 2024 was a monumental year for a number of our countries having elections. And what has been the most notable impact of these shifts in power in the region? What do you think? What is your opinion on this?
Yeah, so I think 2024 was certainly the year of elections. I think Sub-Saharan Africa had something like 13 national elections, and in Southern Africa, Botswana, South Africa, of course, Madagascar, Namibia, I may be missing one or two, all had elections. And I think the theme last year was in elections, protests, forms of like political unrest are more common. Watch out for those, manage the risk of those. Now we're moving into the policymaking phase of these new governments. And I think one thing that has historically been common, not just in Africa, but in other parts of the world, is new governments have tended to get a bit of a honeymoon from the people that have just voted them to office. I don't think honeymoons are going to be something that's common in Southern Africa. One country that did not have an election last year that I'll give as an example that I think is also exemplary of some of the difficulties faced by countries across Southern Africa is Kenya. Kenya facing the need to increase revenues, pressure from external creditors to do so, but also difficult cost of living conditions. They tried to pass tax raises, they tried to increase revenue collection, and that led to some of the big protests and conflict that we saw over the course of the middle of last year. That's something that I think some of these newly elected governments may potentially face as well, in that the people that voted for change. I mean, Botswana had a government, the same party in government for 50 plus years. In South Africa, of course, the ANC was the sole party in government for 30 years. The people that have voted for change in these countries, they want to see change, and they want to see change implemented. But it's going to be a challenge for governments to balance improving public services, making themselves increasingly attractive for investment, while not already making things more difficult for the countries or for the people that live in their countries. And I think that triangle of attracting investment, meeting the expectations of the people that live in their country and that voted them into office, and not increasing debt beyond what in some cases is already very high levels, is going to be a challenging triangle to navigate. And I say this is true about Southern Africa. It is also true about countries in Europe and other parts of the developed world as well. It is not an Africa-specific problem. But I think that's one key theme. That's probably the key theme that I would note.
Yeah, there's a lot of expectations coming from the region myself, and having voted, you really are expecting quite a lot of delivery from the new governments. Thanks for that, Chris. Now, I'd just like to move on to Rufaro. And Rufaro, I would like to ask a question as to, in light of the backdrop of the macro and political climates, how has this affected doing business in Southern Africa from your point of view?
Yeah, so given what Chris has just highlighted, it's quite clear that there will be, especially given the inflation in their interest rates, that are really going to emanate from, from the region. There will be operational expenses, especially from a business perspective. And if you look at the consumers, wherever there is high inflation, you find that there's reduced consumer spending, which now means it does really put pressure, especially in those businesses that are very much retail oriented, like real estate and maybe other consumer driven sectors. Currency volatility, we cannot discount that, especially on the continent. And with currency volatility, what it also means is there will be an increase in imports, and definitely the volatility does erode the value of any savings that are actually held in local currency. And the other stuff that tends to, especially if you look at, let's say, Zimbabwe and Zambia, where they've got, debt pressures, it then means there isn't enough money to especially to put into infrastructure or even some social services. And for those companies that operate in those environments, it means maybe the infrastructure might not necessarily be great because there's too much pressure, especially on the available funds. And also those that work maybe with, that do get, let's say, government contracts. What it also means is, there's constrained budgets, and which in that case, it might take long for them to actually get paid. Going back to the political side, which has been raised, I think, if I'm not mistaken, I think there are about 6 countries in Southern Africa that had elections last year, which was really quite a record as well. And if one looks at the results of those elections, a lot of them, just like what Chris has just said, it was about change. The electorate really was looking for change. And what tends to happen is whenever there's a new government that has gone into power, or even the previous government that is voted back into power, there's always that political uncertainty, which tends to lower the business confidence. And with business confidence, if it's very low, it then means there's reduced consumer spending, delayed investor decisions, because it's more like, let's wait and see what's going to happen. And at times, even businesses, they actually struggle to have long-term planning in those environments as well. So there's a lot that is required for such businesses to ensure that, they really do understand the markets that they operate in. In some cases, it's very much engagement with the government becomes quite key. They also need to have local management, because at least with local management, they do understand the local environment. Scenario planning is quite key. It needs to be a bit more accurate. And going back to a point that Chris has just mentioned about Kenya, which, if the people that have voted the government in, if they feel that their needs are not being met, then, one needs to really have social license to operate in those environments, because people can, they can be unrest. So for those businesses that decide to operate in certain markets, enterprise development is quite important, because you need to show that you are in there for the long haul. And try to have partnerships and maybe collaborations as well. And one big one is to be able to diversify, just to ensure that you hedge your risk.
Well, we've had a number of power kind of shortages in the region. I mean, both in due to the climate change issues, with our dams being low and the hydropower. How has this affected, do you think? Has that affected the sort of investor confidence in the area? Is it something that maybe we will see coming back once we've restored our power shortages?
if you look at like the Kariba Dam now, which supplies Zambia and Zimbabwe, there have been a lot of reports around the low water levels, which is not just affecting the power generation, but also agriculture. And what it therefore means is until those levels have gone up, or there are other power sources, it means the economies are going to suffer. I've got associates that are in Zambia and even family as well that talk a lot about the power cuts, the load shedding periods that are quite long, which is really impacting on the business. So it now means one needs to look at, and I think this is where I think for those that are based in South Africa, people have become, we have really developed this expertise of working around power shortages. So it's a skill that really then is required, especially in Southern Africa, because I read a lot of reports that talk about Southern Africa is a very dry region. And if it's a dry region and we have got climate change issues that are happening more and more, it now means either we need to use technology to be able to mitigate those risks, or we need to use water sparingly so that business can continue.
So that creates opportunities really then for investments in the water and renewable energy sources, in the region. So I mean, it's a double-edged sword, on one hand, there's shortages and the challenges with those shortages, and on the other hand, it creates opportunities for investments to come into the region and provide those services. So I think we need to kind of see it in both lights. Now, we have had, let's look at the geopolitical factors. For instance, the US, and there has been a number of geopolitical factors to consider. The new USA administrations, the role of major bilateral investment partners, and various EU climate regulations. Can you tell us, I'll start with Chris, this question with Chris. Can you tell us how you see these affecting investment opportunities in the region?
Yeah, so I think to start with the U.S. administration, I think there's two minds that depending on who you ask, two perspectives that you get on how the second Trump administration is going to approach relations with Africa and Southern Africa. I think on the one hand, Trump is known to be a transactional person, transactional president. He's not very picky about who he works with. But I think also it's important to note that Trump doesn't like problems that he thinks will be very difficult to solve, and he doesn't like problems where he thinks there's not really much to gain for the United States in investing and solving them. However, Trump, I think what is wrong to say about Trump is that Trump is not going to be interested in Africa. I think certainly the investments that the United States has already announced and made in the Libido corridor, for example, in DRC and Angola and Zambia, is something that the administration will look to maintain. And I think generally from a geopolitical perspective, the mineral security partnership announced between the European Union and the United States and others, China's interest in maintaining access to critical minerals, the Gulf's interest that we've already spoken about. This is certainly an opportunity for African countries, and I think African countries are already recognizing it through what has been, in my view, a bit uncharitably named resource nationalism, which I think this idea that African countries are recognizing, Southern African countries especially, that the resources that they hold are really critical to the next stage of power generation and the energy transition that the whole globe is going to go through. And so they are seeing this once in a generation opportunity to increase their take and their revenues from the extraction of these resources. And generally speaking, they're going about this in a legal, well-communicated, well-managed way in terms of changing regulations. But that's something that I think will remain an opportunity for African countries. Quickly on the European Union and some of the climate regulations. So there's two really that are worth noting about. One is CBAM, that's the Carbon Border Adjustment Mechanism. Now, for those of you that don't know what CBAM is, it basically taxes imports to the EU based on the amount of carbon involved or carbon emissions involved in their production. It's going to be focused on sort of industrial production specifically, at least to begin with. So think steel, cement, those sorts of products. But it's a risk, certainly, for Southern African countries, some of which are major exporters of these sorts of goods to the European Union. CBAM is meant to come into force in 2026. However, there's been some debate and discussion around whether that timeline for implementation is going to be kept. But already, certainly, it's creating challenges for businesses in terms of adapting to it, and it's probably causing and is contributing to delays in investment decisions as well. The second one is the deforestation regulation. Similar concept. Any product imported to the European Union will need to be, or cannot be rather, the result of deforestation activities or having benefited from deforestation activities. So this is, things like coffee, beef, so on and so forth. However, again, apart from just the complexity of complying with these regulations and the potential impact that they could have on Southern African countries, there is also some shifting politics in Europe that it's important for businesses and investors to be aware of and understand. And that is that the focus on the energy transition in Europe is starting to lose some of its attention. The deforestation regulation was initially intended to go into force at the very end of last year. However, with a couple months' notice, it was delayed a full 12 months. And it's entirely possible it could be delayed further. But that sort of like short notice delay is going to still create supply chain problems. It's going to create difficulties for investors that have already gone through the process of investing and ensuring compliance and so on and so forth. So I think, there's a lot of opportunity from a geopolitical perspective, particularly in the critical minerals that you know very well about, Nomsa space. But I think there's also going to be some challenges in terms of not just compliance with some of these global regulations emanating from the EU, but also how are the political winds in Europe shifting, and how is that going to potentially affect the timeline and the depth of implementation of these regulations?
Well, that means that we need to keep an eye on the ball as to the developments that happen both in Europe and the US, so that we can try as much as we can to leverage on them. Now, I think the question that I want to ask both of you, starting is South Africa is the first country that will assume the African country that will assume the G20 presidency. What benefits could the region actually get from South Africa being in such a position? And I would like to start to the question, Rufaro, could you please let's have your ideas on what you think is possible.
So to be honest, this is really a proud moment for Africa, because the G20 presidency offers South Africa a transformative platform to influence global decision-making by attracting investments and also to accelerate regional development. And South Africa can actually ensure that the G20 platform drives meaningful and sustained benefits for the African continent, fostering development, cooperation, and a stronger global presence. So if you look at the way South Africa can even do it, is really to put spotlight on Africa's development needs, global agenda setting for African priorities, which talks to sustainable development, infrastructure development, climate change, really put it on the global agenda. intra-African collaboration. Even though we do have our Africa Continental Free Trade Area, it's really a platform to really put it, on the platform as well, on the agenda, showcasing Africa's potential. It really offers the chance to demonstrate Africa's economic potential. We hear a lot about this is Africa's time, Africa's time is now, but we need platform to be able to do that, especially given that G20 is really the strongest economic bloc, coming to Africa, which means, it creates a platform for South Africa to engage with the most powerful economies in the world. So it's going to provide increased investments. It also helps, especially strengthening the regional cooperation as well, working very closely with the other African governments. Capacity building, because one of the challenges that we find a lot, especially in the African continent, is from a regulatory perspective. We find that at times there might be some regulation that might be adopted in a certain country, but at times we lack the expertise, which at times we find in developed nations, to really ensure that that regulation is implemented correctly on the continent. So capacity building and knowledge sharing is going to be quite key, so that it can really help develop institutional frameworks and governance structures on the continent.
Chris, I don't know if you'd like to add anything on that.
Yeah, I think Rufaro did a thorough answer. I'll only add, so the actual G20 summit's gonna come in November. So there's going to be building up throughout the course of the year to this summit, which presumably will take place in Johannesburg. But I'll note that the next country to hold the presidency of the G20 will be the United States. And so in this context, usually the country that will be next to inherit the presidency is the one out of all the other G20 countries that works the closest with the current hosts on understanding issues and engaging on the challenges, and also sort of coordinating on what's going to be the topics in next year's conversations. And so I think, obviously, given some of the Trump administration's sort of irritations with multilateral institutions, that is a bit of a risk, but it's also absolutely an opportunity for South Africa in particular to have this direct, ongoing, consistent engagement with the United States on the G20 topics of minerals and climate finance, and the energy transitions and debt burden and other issues that Rufaro spoke about, in an ongoing sort of direct bilateral way that potentially they may not have otherwise had. So that's just an additional point I'll note.
Do you think there's room for South Africa to actually talk about debt relief, financial support for emerging communities, and debt restructuring mechanism as part of this G20 presidency?
Is that for me?
Yes, that's for you.
Yeah, I think yes and no. I'll keep it brief. I think debt relief of the style that was done 25 years ago is not particularly likely, certainly not at the current point in time. However, I think there is a recognition of the need to think about what can be done to manage the debt levels that exist in a lot of African countries. And I think one of the solutions that's being looked at in a bit more detail is what's called debt for nature swaps. And this, in very brief summary, is basically a investor will buy a share of a country's debt and offer a lower interest rate on that share, with the expectation and the agreement that the country will use the savings from the lower interest payments that they're now making to invest in some sort of climate resilience project or a renewable energy project, and so on and so forth. And so that's a way to provide some sort of debt relief effectively while directing the savings in a way that the investor can have some confidence that it's being used in a reliable way. So that's one way that I think is going to get more attention, and indeed already has over the past year.
Thanks for that, Chris. There's a question in the box that's in Zambia. It says Zambia has worked very hard to restructure its debt. What more do countries like Zambia have to do to attract more investors, specifically in the critical minerals area?
Rufaro, would you like to, or Nomsa? I know you're the critical minerals.
Okay. I think, I mean, from a critical minerals area, I think there needs to be a lot of collaboration in the Southern African countries, number one, because obviously we cannot, and especially investment in the infrastructure. There's already the Lobito corridor, where you're getting inland, mines that are inland, they will hopefully be able to take their, transport their products to port at a relatively reasonable price. The issue that we're having a lot of in the Southern African region is that there's a lot of potential for mining of these critical minerals, but a lot of it is inbound, it's inland. And we need to get it out to the port in the most, commercially, efficient way and the cheapest way, because this hits back at you when you have to look at the commodity fluctuations. And if the prices are down and you now having to expenses of transporting the product to port, it just means that you get less on the product as a revenue. So we really do need to focus on the logistics aspects of things and carry a lot of what we produce to the port in the most efficient manner as possible. And that obviously requires a lot of investments. Not one country can do it on its own. And not one mining company can actually do that investments on its own. We need collaboration from within the Southern African governments and the mining companies that are grouped together or for the same product that will hopefully be able to invest in building your railway logistics from mine to market. So that I don't know if there's anything else, Rufaro, you'd like to add on that?
Not really. I think all I wanted to say is, I think with the power constraints right now, especially in Zambia, they are acting as a deterrent. So I think, if an investor wants to know that if they come into the country, there will be solutions to be able to solve the power issue.
I think the power issue, actually, it's not so difficult to solve. I mean, you look at how South Africa has solved its issues, and now you are getting a lot of captive power, solar power, plants coming up in next to mining concerns. So for me, that is less of a problem. I think where the challenges are there is to get the regulatory aspects right. And which will enable such power, IPPs to set up and directly provide this power to the mines or wherever it is needed. And currently, some of our regulations will not they don't permit like your over 100 megawatts, or they're still at a very low, your 5 megawatts. So we need to look at the legislation and see how we can actually make sure that that is done as soon as possible, to invite the IPPs. The IPPs are queuing up to come in, as long as there's off-takers that will pay on time, etc. That, I think that is something that has shown in South Africa that is absolutely possible. I think that's the only, there's another question in the question. What plans are there to add value before exporting the raw products, thus creating jobs for future generation? That's also a difficult question, because now you're going into your beneficiation and you're looking at your your plants, your processing plants and all that. And we, again, those are not cheap. We need to set them up and process and have secondary industries to the mining that will provide the processing. And in this way, it adds value, because you are taking, the value of the material that you're getting out is much better. You're getting better value on export. But that actually requires a lot of investments, and also, balancing it with the energy requirements for processing. So you'd need a lot of power, of your renewable power, and the big sort of large power solutions to enable to drive that beneficiations. And then there's a question, I think, for either you and Chris, that says, do you think under the Trump, South Africa will be excluded from AGOA? I think that's isn't it? That's tied to BRICS. It's a membership in BRICS and dollar.
Yeah, it could be. So good question on AGOA. So the main review will be, well, I suppose this year, later in the year. Congress is also quite involved in that decision. Usually when Congress is involved in decision making on topics like this, it's good for their resiliency. I think, again, coming back to Trump and being transactional, he may try and get some sort of benefit out of continuing to extend AGOA to Africa, some sort of concession, perhaps, a relatively minor one. But I think his administration will be aware that to cancel AGOA, apart from the negative impacts on African economies, would have a broad impact on the perception of the United States in Africa, that would potentially be greater harm to the United States than it would necessarily be worth from a sort of protectionist agenda. The final point that I'll make on that is, if AGOA were to be canceled, in my view, South Africa is not as exposed and would not be hurt as significantly as some of the conversations and some of the articles that I have seen suggest. I think in terms of most of the imports from South Africa that go to the United States, those would not be severely impacted by an end to AGOA.
And so I think that's the questions we have in the chat. Well, did you want to, maybe I can hand it over to you now to close us off.
Thank you, Nomsa, and thank you very much to you and to Chris and to Rufaro for taking us through the different angles and different views of how 2025 may actually pan out for Southern Africa. I would say I noted that there's a sense of pride, there's a sense of optimism, and with that in mind, to start off with, I think I also feel that there's a drive to navigate these challenges that we know we are going to have, just to find the best way around all of those with the information, at hand, to help us to make informed decisions around those. So thank you very much for that. In closing, a quick reminder to join us on Thursday this week for the West Africa Regional Outlook webinar. And on top of that, I look forward to welcoming you on 3 February in South Africa at our 12th annual mining series. So thank you very much for your time for today and for all you do for Africa. Until next time.